What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm diving back into the auto sector, and I'm talking about a company based out of Fort Lauderdale, Florida. The name of the company, AutoNation, ticker symbol AN, listed here on the New York Stock Exchange. Market closed roughly 20 minutes ago. We're sitting here up a little over 2% on the day at 107.14. We're going to check it out. So this company, 52-week low 94.92. 52-week high 135.57. So it's at the lower end of this 52-week range, which, you know, could be viewed as a good thing. You're buying at the lower end of the range. Market cap 5.3 billion, PE 4.3. All right, first off, PE here 4.3, very, very attractive. Quick anecdote. Several years ago, before AMD started taking off to the moon, at roughly like $50 to $60, I remember looking at Intel, looking at AMD. AMD was on a run. Intel was just kind of chilling. It was just kind of flat. AMD just came off a run. It seemed overvalued in my opinion. And Intel, again, was just kind of hanging out, and it had a PE of like 10 or 11 at the time. And I stepped in. I said, all right, I got to buy one of them. I bought some calls on Intel. The very next day, AMD gets upgraded, and then like a day or two later, they came out with like a new processor or something. That's when the company ended up exploding into like the 70s, right before the Zilling steal. And the whole time, Intel was just dropping 3 to 5% a day on every positive announcement made to AMD. They would punish their competitors, which for some reason I took the position in, right? But you know, we all have those stories, and, you know, I ended up taking a loss, but basically the point of that little anecdote was just to tell you guys that you have to take more than one metric into account, right? Just because a stock has a PE of, 8 or 9.5 does not mean it's undervalued, does not mean it's going to go higher. You have to look at a little bit of past performance. You have to check the numbers. You have to see why the market felt it was justified to lower the stock to that level of a 9 or 11 PE, whatever it may be, right? So the PE looks attractive, saying the company's worth $5.3 billion. We come down here, $6.6 billion in revenue in the last quarter, right? So you know what I'm going to say. Automatically, in my opinion, tremendously undervalued. This company net income positive over several quarters, stretching back for several years. So when companies like Airbnb, Roblox, and Rivian are rewarded, it really just makes you look at a company like this, and it should be even more attractive to you. So revenue had a massive jump, almost $26 billion last year, nothing to sneeze at all. This company, in my opinion, is really going to be rocking and rolling in the long term. If we check these quarters here for this year, 6.7 billion, 687, which is what? That's like 13.5. And then we come here, so now we're looking at 19. You're looking at like 20.1 billion. So if they post 6 billion in change for the last quarter, now they did more revenue than they brought in even last year, which was technically their best year in 5-6 years. So this company is really rocking and rolling right now. And if we pull out a max chart, you can see obviously stock since inception, you're up over 3,000%, but especially since pandemic, you have seen an absolute explosion, just like we saw in Goodyear Tire. However, they have been beating Goodyear Tire up a little bit more, and this company has been maintaining, look at that $100 value. Just bouncing. Look at that. Look at how many times it bounced off that $100 value range. So that's where they want to keep the company, it seems like, at a minimum. If we switch over here to Trading View, I just wanted to come down. See here, it says $9.5 billion. Honestly, even if the market cap right now is $15-20 billion, it's still undervalued in my opinion. The company brought in $26 billion last year, right? So they're worth at least that much, if not more. That's the point I'm trying to make. This company easily $40-50 billion company, in my opinion. That's where the market cap should be. You know, they want to beat this up 0.1, 0.2% profit margin decrease. Like that. That's why it grinds my gears, because in my opinion, a lot of these analysts are just looking at the wrong thing, right? And then if you look at that annually, look at that massive pop going into 21, which has been which has been maintained here in 2022. So this company should be rocking and rolling much higher than it is right now. But I wanted to check the financials quickly here. And because like I say, men lie, women lie, numbers do not lie. And what we have here are some pretty healthy phenomenal numbers, right? We got the PE, the lowest it's been in years, was double digits, high single digits, now 4.3%. Price to sales ratio, again, has been bouncing around. It's not the lowest it's been, however, 0.2, excuse me, 0.2. You know, we've seen much higher ratios on much worse companies. Price to cash flow has since pulled back to very low single digits here over the last several years, sitting here at 4.3. Price to book ratio sitting at 2.4, right? It's not the lowest, it's not the highest it's been. However, again, to compare, we have seen much worse companies trading at much higher ratios. Enterprise value has been consistently increasing for the last 4 or 5 years in a row. Excuse me, the heat comes up, all of a sudden I start choking. My apologies. And we move down here to the profitability ratios, because this, in my opinion, is really where analysts should be looking. And it kind of grinds my gears and breaks my heart because, again, I feel like these people just don't know what they're talking about. They don't know what they're doing. Return on assets. Look at this. Low single digits, maintaining 3-4%, fine. Last year, 14% pop. As of right now, 17% return on assets. So you compare this to a few years ago. It's a 400% increase, right? The stock should be rocking and rolling, my friends. Return on equity. Same thing, 20. Mid-teens has a massive explosion up to 49%, now 64%. Return on invested capital, same story, maintaining single digits over the last couple of years on a slight pullback. Pop up to 25%, now 26%. Gross margin percentage has climbed to the highest it's been, almost 19% right now. Operating margin has popped up to north of 7% from the 3s and 4s, sitting here at 7.5%. The EBITDA margin, once again, earnings before interest, taxes, depreciation, amortization, was maintaining that 4% level, jumps up to 5, 8, now 8.25%. Net margin percentage we looked at before, increasing the bottom line, and has now since pulled above 5%, which is 150, possibly 200% higher than where it has been historically over several years before where we're currently sitting. That is why, looking at all of these metrics, in my opinion, this company really should be moving here. And I think it's going to start to happen after the ball drops, but that's just my opinion. So we're sitting here at stock charts on the daily. You can see the RSI was pulled back to around 30. Obviously, everyone felt it was oversold. Then you started to see that bounce as it went from about 100 to now $107. Looks like the MACD is curling a little bit, so you might start to see excuse me. You might start to see that rise back up to 113, 114 level here. But I wanted to show you guys also on the weekly here. Switch over here to the weekly. And yes, you could say that the MACD is turning down, and you could potentially see a pullback to sub 100 here to the mid 90s. But like I always say, if we like it at 107, 106, 105, and then we come back a couple of weeks later and we have it at 98, hey, if I liked it at 106, I'm going to love it at 98, right? But this is your main metric right here. This is your 200-day moving average. And as we saw, again, to compare with Goodyear Tire, which I'm consistently bringing up because the valuations seem very, excuse me again, the valuations seem very similar, but both of these companies are in the auto industry, which is why I'm consistently making this comparison, right? Because we saw the same run-up in Goodyear Tire, but then we saw a sell-off. Here with AutoNation, as you can see, massive run-up, and has been maintaining like that $90, $100 value for almost 2 years straight now. So that 200-day moving average that was sub 50 when it was north of 100 has now slowly climbed up to 78.36. So now, instead of your total downside being over 50%, now it's like 30%. Chances are it's not going to pull back to 78.36, and if it does, in my opinion, I would be all over this damn thing like white on rice. But I seriously believe I don't believe they're going to take it that low. So, again, if it does break 100, I would be even more of a buyer. But even here at 107, I like it. I like it. Again, the technicals, might beat you up a little bit here in the short term, next couple of weeks, maybe the next month or two. But I think if you just slowly add to this position, I think you're going to turn around in several years, and I think you're going to appreciate the fact that you saw the video and you contemplated taking a position. But I'm going to leave it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. I love you. If you like the video, subscribe to the channel. Awesome. And like I always say, moving forward, I understand markets are rocky. They're very stressful. Sometimes you feel like you don't know what's going on with the economy, but I just want you guys to stay level-headed. I want you to stay sharp. I wish you all well, you and your families. Tomorrow starts Christmas Eve, Christmas Day on Sunday. We have Hanukkah, we have Kwanzaa. I want to wish everyone Merry Christmas, Happy Holidays. I will probably make a video before the New Year drops, so I'm not going to say New Year to you guys, but again, thanks for stopping by. I wish you all well. Hope your families are doing well. Any questions, comments, or concerns, drop it down in the comments section. You want to join the Discord, pop in. We'll have a little back and forth. And again, thanks for stopping by. Enjoy your weekend, guys.